Nedbank is a full-service banking group controlled by Old Mutual. Market cap here, 119 billion rand, PE of 10.6, dividend yield 4.7%. Nesan, let's get your thoughts on Nedbank. So far, you have been not hot on Standard.
Hot on First Rand.
And hot on First Rand.
Nedbank, I think, is a similar situation to Barclays in the sense that we know that Old Mutual is restructuring the whole group, and there could potentially be a sale of Nedbank or an unbundling of Nedbank. We're not quite sure yet. So in that sense, you know, similar to Barclays PLC and ABSA, there's going to be a little bit of a cap on Nedbank share price until something happens with it.
But this is going to be a little bit more orderly than what we've seen vis-a-vis Barclays and ABSA.
Yeah, I think it's probably easier to exit Nedbank than Barclays is going to be to exit ABSA. 100% right. The big concern for me, though, in Nedbank is really earnings-wise. Amongst the big four banks, you know, Nedbank probably has the most aggressive provisioning, very low provisioning. Going into, you know, we're not going to have a steamrolling economy. You know, it's going to be better than last year. But you want to make sure that you have got, you know, sufficient fat in there just in case you get an earnings surprise one way or the other. Now, Nedbank had an earnings surprise with EcoBank, I think it was last year. Going into this year, you know, they've got a very big property finance business, which I think has come under pressure, as well as the renewables business, which you know, they finance as well. And we all know what Eskom is doing with that. So I think for me, those two big concerns and the lack of provisioning may actually impact on Nedbank's results.
So Nesan cautioning there on potential surprises for the market.
Have we looked at the share chart yet? I think we're going to see somewhat similar, although quite a nice rebound. It's interesting. Look, they are, as Nesan said, very strong in property finance, very strong in vehicle finance as well, through Motor Finance Corporation. That part of the business is also struggling a little bit of weakness in retail demand and motor sales, as we know. But Mike Brown has run a tremendous business, and as you say, the Old Mutual reorganization is a more orderly process, because it's not like the Barclays thing where they can't just unbundle it and they must get out and must sell. Here we've got a case where you don't know whether or not it will happen in one way or another, but you do know that between Bruce Hempel and Mike Brown, they're going to make sure it's cautious, careful reorganization,
and that it doesn't damage shareholder interests.
I should think so, yeah.
Let's call it hot or not.
I'm going to go with not hot.
Not hot. Paul?
I'm going to go with not hot too, sadly, and I think, again, it's the backdrop that worries me. I wouldn't be rushing in to buy these with fresh money, so that means not hot.